What is up, you guys? Pete DiCarlo here, and today we're going to be talking about earnings. So today was really the first big earnings day, or big tech earnings day. Today we had AMD, Microsoft, Pinterest, Google, Visa, and Starbucks. Yesterday was Tesla, and I honestly was going to make a video on it, but decided not to because the earnings were neither that crazy good and neither that crazy bad. Really not that big of a deal. I might end up making a video if you guys want me to, so comment down below and let me know. But what I want to go over in this video is Alphabet. I want to go over Starbucks, Microsoft, and AMD. And instead of doing all of them in their own separate videos, which would help generate more clicks and more views and work the SEO a little bit better, I don't want to do that to you guys. I'd rather just put it all in one video as well. Tomorrow, probably put it all in one video as well. So hit the like button, subscribe to this channel. Thank you guys for all of the support. It truly means the world to me. And let's get started. So the first one is Google. So Google had record earnings. You can see that right now. Let me go to the 1 minute chart. It'll be a little easier for you guys to see. Right now the stock is up pretty well. You can see we closed right now at $2,312, and the stock currently is up about 4%. Now Google reports a massive revenue beating revenue growth by 34%. So the numbers, the earnings that came out was a $26.29 per share earnings versus a $15.82 per share. So EPS, they beat. Pretty crazy though to think about the PE ratios that we're trading at here. I talked about that when I spoke about Tesla with my team yesterday. $26 per share of earnings when Google's worth $2,300 something a share. But that's for a different video. Revenue came in at $55.31 billion versus $51.7 billion, which was expected. Google Cloud revenue was $4.5 billion or $4.05 billion versus $4.07. So they did miss on that. Not that big of a deal. YouTube ad revenue beat $6 billion versus $5.7 billion. Traffic acquisition costs, so TAC, this is an extremely important number when it comes to Google. When you saw them take a massive hit, I think it was 2 quarters ago or 3 quarters ago, this was the number they missed on, but this came in above expected, 9.71 billion versus 9.25 billion. So overall, really good. Google's revenue rose 34% from the same period year over year. The company reported that advertising revenue grew 44.68 billion for the quarter, which is crazy. It's almost 200 million in a year. That's a significant rise from 33.7 billion when the same quarter year over year. YouTube ads came in at 6 billion during the quarter, a 49% rise from 1 year ago. YouTube being the winner of the Rona, I can't say the P word, in terms of social media sites, according to a recent Pew report, which said that video platforms saw usage grow 73% in adults from 2019 to 81% in 2020. Overall, congratulations to anybody who has Google. Great earnings. As far as where do I see it going from here, stock is up pretty massively right now. I don't know if we're really going to rip that much more. Like we're way up into this all-time highs range. Right now trading at 2,450, but congratulations for anybody who hit Google. The next one is going to be Starbucks. So Starbucks did have earnings today. Very quickly, I saw the stock was down a bit. We closed at $116. We did hit lows of like 112, which is a 3% fade before finally bouncing. But the numbers weren't bad from what I saw. I don't know how the call is going to go. That's something that you're going to have to watch. All of this is 4:33 Eastern Standard Time, the time that I'm recording it. So none of the calls have come out yet. But Starbucks raises 2021 forecast at U.S. same-store sales growth and returns to I can't say that word, levels. Now, as far as Starbucks is considered, as far as it's considered same store growth in the US, those numbers are extremely important. So when you're analyzing earnings for certain companies, depending on the sector and depending on the company, there are different numbers that are extremely important. So if you look at social media, it's daily active users, or you're looking at any platform or even something like Twilio or something like that, it's daily active users. That's something that's extremely important. The other thing that you want to look for with something like Netflix, which we talked about in the Netflix video we made, was subscriber growth. That's the number that's the most important. When you look at something like, Google, which we talked about, target acquisition is extremely important. When you look at something like Roblox or a video game, it's the amount of revenue that a daily active user spends. So it's all these different numbers are different for different companies. Now, when it comes to Starbucks, something that's important is same store growth in the United States, because as far as analysts are considered, Starbucks can't grow in the United States anymore. They are so massive at this point. Everywhere around you, you know there is a Starbucks. How many more people can really drink Starbucks, right? So the two ways to scale a business from a revenue standpoint, not just, this isn't just Starbucks itself, but from a business in general, is you gain more clients or you charge those clients more money. Right. So when a company can no longer grow as far as, users or as far as customers, such as Starbucks, the only way that they can make more money is by raising the prices of things. Now, what's good to see with Starbucks is same store growth is rising. And that's something that's important because, like I said, they are moving to China. They are moving all over the world. There are Starbucks, but people really want to see same store growth in the United States. So Starbucks is seeing signs of recovery across from its businesses, with same store sales in China turning positive last quarter for the first time during the Rona. Starbucks shares have risen 8% so far in 2021, giving it a market value of $136 billion. So shares of the company dropped 2% in extended hours. Company reported earnings per share of 62 cents versus 53 cents, so they beat on the top line. Now, when I say top and bottom line, for anybody who doesn't know, top line means EPS, bottom line means revenue. So they beat on the top line, which is earnings per share, 62 cents versus 53 cents, and they missed on the bottom line. Not by much. 6.7 billion is what the revenue was. 6.8 billion is what was expected. Starbucks reported fiscal second quarter net income of 659.4 million, or 56 cents per share, up 328 million, or 28 cents per share of the year earlier. Excluding items of the coffee chain earned 62 cents per share, topping 53 cents per share expected by analyst surveys. Net sales rose 11% to 6.7 billion, missing expectations of 6.8 billion. Global same-store sales grew 15% as the company lapped a decline from 10% year over year. U.S. same-store sales growth 9%, signaling the return of pre-Rona levels. A year ago, the same-store sales in Starbucks' home market fell 3% as lockdowns were implemented across the United States. So, not a massive beat, not massive growth, but it seems, as far as Starbucks is considered, that now that the world is opening back up again, that same-store sales growth in China and in the United States are doing really well, signaling that we should see things back to normal pretty soon. Microsoft, really good earnings for Microsoft. We did see a decline, but what you guys have to realize is, as far as like price action after earnings, fundamentally the numbers could be phenomenal, but a stock could just be slightly overpriced. And you can see that right now Microsoft is down about 3%, but Microsoft books its biggest revenue since 2018. They beat analyst estimates on the top and the bottom line. Windows revenue grew from device makers was higher than expected and more than they had predicted, and Azure revenue growth was flat prior to the quarter. So earnings were $1.95 per share, adjusted versus $1.78 per share, so they beat that. Revenue was 41.71 billion versus 41.03 billion, so they beat on that. Software and hardware maker posted a 19% annualized revenue growth for the quarter, which ended March 31st. So to be as big as Microsoft and to post a 20% quarterly revenue year over year incline, that's absolutely insane. Biggest quarterly increase the company has posted since 2018, in part to gains in PC sales resulting from the Rona-driven shortage last year. So, if you guys don't know, if you've been trying to buy a computer, it's been tough. There's been semiconductor shortages. There have been graphics card shortages. There are camera shortages, keyboard shortages. Like it's ridiculous. Microsoft's intelligence cloud segment delivered $15.12 billion in revenue, which is up 23% year over year and above what consensus estimates of 14.9 billion were. Intelligent Cloud contains Azure, Windows Service, SQL Server, Visual Studio, GitHub, and Enterprise Services. Now, I'm actually going to make a note here because I want to do a full-on deep dive on Microsoft for this channel for you guys, because a lot of people, when they think of Microsoft, they think of themselves like, oh, it's Microsoft Windows, it's Microsoft PCs, it's Microsoft Xbox. That's not the case. There's so much more to this company. And even though it's a massive company, I really want to do a deep dive for you. So we will make a video on that for sure. Overall, though, they killed it. Great earnings. The stock is down a bit. Overall, though, I think if Microsoft were to fall down to 242, I would probably be buying. And the final one I want to talk about, AMD. AMD, I freaking love AMD. This company is phenomenal. I talk plenty of times about their CEO. She's phenomenal too. I can't get these. Let me see. AMD earnings. For some reason, it wasn't coming up. CNBC. Let me see. Why can I not get any information on their earnings, guys? Overall, though, they did really well. Here we go. I can get it on TD Ameritrade. You guys won't be able to see it, unfortunately, but I'll be able to get it up for you guys. So let's look at AMD and how it's performing after hours. Not up as much as I would want. We did have a good push, but it sold off pretty heavily after hours. But right now, the stock is up 3.5%. I think it should push more, but I think that we'll see it move on the earnings call. But overall, let's take a look here. All right, so AMD increases full year revenue guidance after record quarterly sales. The stock jumps more than 3% at extended sessions. Let's see, a chip maker said that the data center revenue is more than doubled to fuel their record quarterly sales. All right, I want to get the actual number. Let's see, AMD reported first quarter net income of $555 million or 45 cents per share, compared with $162 million or 14 cents per share. So literally killing it. 14 cents per share is what they were expected versus 45 in the year ago period. Okay, so that's not what they were expected. That was their year over. Still absolutely insane. Like, that's a 300% increase year over year. So after adjusting for stock-based compensation and other factors, the company reported an earnings of 52 cents per share compared with 18 cents a year ago. Revenue rose to $3.45 billion from $1.79 billion 1 year ago. Analysts surveyed by Fact, well, I don't care about that, forecasted adjusted earnings of 44 cents a share and revenue on $3.1 billion, projected between 3.1 and 3.3. Executives also increased AMD's guidance. So guidance is extremely important. I talk about this a lot. Sometimes the stock can have not so good earnings. They killed it. But sometimes the stock can not have the best earnings, but they give amazing guidance, and vice versa. Sometimes a company will have great earnings, but they give crap guidance. So guidance is extremely important, especially for a sector like semiconductors right now, which has been dealing with a ton of shortages. So let's see. Executives increased AMD's guidance for the full year, sales increasing of about 50% from previous guidance of a roughly 37% original increase. AMD reported revenue of $9.67 billion last year, suggesting sales of $14.65 billion this year. So that's a massive beat that they're expecting this year. Analysts have been forecasting revenue of $13.46 billion according to Fact Set. So their outlook for this year is phenomenal. Usually to a company, when they want to go ahead and give a forecast, they don't want to give something bad because they don't want the stock to get hit, but they also don't want to give something that they're not going to hit. So I would expect that number to be more about probably 15. But overall, guys, great earnings. Like, even if you're somebody who's in Microsoft and the stock is down big now, fundamentally amazing earnings. I really like it. Starbucks, great earnings, not doing too much after hours, and Google and AMD absolutely freaking killed it. So let me know if you guys want me to make a Tesla video. Let me know if you guys are interested in me doing any of these other videos as far as these companies are considered. Tomorrow we have a huge day, so that's going to be extremely important. We have Apple, we have Facebook, I think Amazon as well, or one of them is going Thursday, so I'll have to see. But overall, guys, thank you for all the support. If you want to be a part of my private academy, get access to every single trade I take live as soon as I take it, live stream just like this with me and the team every single morning for the first hour of market open. I go over what I'm trading, why I'm trading it, answering questions, tons of things. You get access to our Discord, and our 60-hour course library teaches you everything that I've learned in my 7 years of trading and more. Thank you for all of your support. Use the code Academy90, start for $10 your first month. I'll see you guys tomorrow. Peace.